In this series, I will teach everything you need to know about CRT, which stands for Candle Range Theory. So, you will learn all CRT models, all entry types, and of course the execution. The execution is most important part because without the good execution, you may have the perfect edge, perfect setups, but if you can't execute it efficiently, and if you can execute it without hesitation, it doesn't matter how much potential you have. So this series is consists of 3 parts. It's part 1. I will teach basic background, model 1, and the confirmation 1. In the next part, 2 more models and the second confirmation, and the last part, the last confirmation, execution psychology, and how you can effectively positioning yourself and making profits in the long run. So I want you to know that in this series I will not teach you this kind of CRT because I think it's fake. It will not work for you. This is so random. There is not any narrative behind it. So I will teach the CRT models which I have conviction with it, which I have the track record, and which I know I have enough confirmations for my entries. Well, let's start with the basic understandings of candle range theory. Actually, the candle range theory is the part of turtle soup. It's not something special, something complex. It's so basic understanding. It's literally basic manipulation approach and part of the turtle soup. If you don't know about the turtle soup, I also created the course of the turtle soup, which you can access the turtle soup part 1 in the above with the cards. So before the understanding the manipulations, we need to understand the liquidity concept and order flow behind these manipulations. If the candle moved or closed some direction, maybe it's bearish or bullish, doesn't matter, this candle have a wicks. The reason why the price moved and this candle formed is order flow behind it. Some limit orders and stop orders executed by aggressive market participants, aggressive sellers and buyers, with hitting the ask and bid orders resting in each side of the price. So it's the footprint candle. As you can see, these orders are executed. Here, this side is ask side, which they are the right side representing the buyers, aggressive buyers, with hitting the sell limit orders, and the left side shows the aggressive sellers, which they are hitting the bid orders of passive buyers. If the price hasn't reached their levels, it means they are unexecuted orders waiting to be executed in upper prices and lower prices. They could be limit orders or the stop orders which waiting for to be executed. And after the time passes, more orders are accumulating because, as you can see, these candle highs and lows didn't execute the orders resting above this candle and also the below this candle. So these orders are accumulating in each minutes, in each seconds. And finally, let's move on to the model 1, CRT model 1. It's so basic. Actually, it's the most basic model which I wanted to add to this model for part 1 because it's the foundation. Part 1 is the foundation, and this model will be more easier to understand. As you can see, this last candle is our manipulation move. So it took out the highs of these candles, which there were waiting orders, limit orders or stop orders to be executed. After that manipulation move, which executed all the orders resting above here, and then price starts to reverse to opposite side. It's for the long position after the manipulation of these lows, which they are relative to each other, and then price immediately reacts to the opposite side. So there could be the only two candles. We need just at least two candles to using this CRT model. Maybe it's 3 candles, 4 candles, it doesn't matter, but we need at least 2 candles for using this model. These 2 candles are relative to each other, and the last manipulation move after taking out these orders resting above the prices should be closed with the wick, not with the body. So now let's move on to confirmation 1. This tool right here you can see is volume profile. It's the simple order flow tool which represents the volume transacted in each price levels. So how can you use this confirmation? Manipulation should occurring at the low volume node. This move right here, our manipulation candle, which took out these highs. This manipulation move should be representing in the lower volume nodes, which they are less volume transacted. And you can see these sides are keeping more volume transactions. And the price, when the manipulation move happening, moving from the higher volume node to the lower volume node. This part of the price where the more volume transacted, where the most orders executed, is called high volume node, and the higher part where the less orders executed is called our low volume node. I think you understand that as simple as possible. Now let's look at how we can apply this model on the charts. It's the NQ 1 minute chart. Look at here. As I teach, these candle lows are relative to each other, which it means there is liquidity with resting to be executed. And after the last move, this candle, as you can see, this wick, candle wick, took out all the lows of the candles, relative lows. This low and this low are relative to each other, and actually it's look like they equal. And after that, this candle closed above these prices with a wick. And then we had observed price pushing higher. It's actually one of the best reversal types. Now look at the second example. These highs of the candles are relative to each other. And then last candle took out all the highs of these candles. And then price started pushing lower. Don't hurry up for the entry confirmations because I will teach them in the next parts. In this part, I just explaining the basic understandings, that's all. All you need to do is marking this kind of scenarios in the charts as a homework until the next part. Same here, these lows of the all candles, again, they are relative to each other. And the last one is our manipulation move. Again, it's closed with a long wick. And if you look at here, you can see it's the high volume node, and where the manipulation move occurring is the low volume node, where in these prices less volume transacted, less orders executed. We can see less market activity, and these parts are high volume node, and the manipulation move started from the high volume node, low volume node, and then immediately reacted to opposite side. Another example, these candle highs are equal to each other, first, second and third candle. And the last one is our manipulation move, took out these all highs and closed below. So again, as you can see, these parts are high volume node, and where the manipulation move happened, you can see these prices are low volume node. Sometimes combination of candles are not perfect all the time. Example here, as you can see, all the candles are actually in the bad order. But the most important thing is the marking the correct manipulation move. This one right here. Another perfect reversal here. Two candles are relative to each other here. Last one is the clear manipulation, which is happening in low volume node, and then price immediately reverses to upper prices. Here is the last one. In this scenario, these highs, the 1, 2, 3, 4, the 4 candle highs are relative, and finally is our last manipulation. Executed all limit orders, resting above these prices, and then reverses to lower prices. We will take the short position here with our confirmations, and then you will able to catch up the perfect moves with these models, which I will teach you all of them. These CRT models are based on in my own experience, which I observing the price movements for the 5 years. Manipulations are most important part of the market. Finally, it's the end of the first part. See you in the next parts. Be safe.